Welcome. It's Wednesday, October 4th, and we're in the midst of a little bit of storms in the market. You say, what do you mean, Dan? You know, if you look at here in the SPX from September 14 to the current day, October 4th, what's that, about 2.5 weeks or something? The SPX has gone from a high of 45.05 to today knocking on the door of that 200-day moving average. We're at 42.28. The big 200-day moving average is around the 200 level. So you're talking about 275 points in what is that? Sep 14 to October 4th, 18 days or whatever that is. But you're talking 275 points. And if you look at, what's the expected move? If you look at Thinkorswim here, what's the expected move of something, 17, 18 days, 120, 130 at the most, 140, where you're talking almost 2 times the expected move. So it's a very, very, very small probability. And also, range-bound traders, you're getting a lot of these big candles. You say, what does that mean, Dan? These big candles. It means most of those days, the range in SPX between the high and the low was about 50 points. Whereas if you look at today, it's the high is 42.48, the low is 42.20. No big deal so far, right? Relatively a quiet day. And with this big move down, it's popped the VIX from 13 almost to 20, outside the 2-month range. So we're in a little more volatile environment right now. The market has SPX has got a tummy ache, and it's not ready to come back. It seems like it's fueled this time, at least from the media, by the, if you look at the Treasury's interest rates right now, that seems to be the buzzword, and we will see. There's some more news next week with the CPI, PPI. You have some job payrolls, which will be on Friday, and then you start the October earnings season. But again, you could say we're oversold, and that would be logical, but doesn't it hasn't come back yet. Everything's dreaming at this point. I mean, it looks like we're kind of holding on to this 4,200 level for this second, but we'll see. As far as a strategy, obviously, we're not range bound, so we'd be smaller, more gingerly in the range bound part of the portfolio and the spec part of the portfolio, because you're getting movement. For those who are pretty good at the spec part, you have that going. And then the long portfolio, which I'll address right here, for people who said, hey, I liked Apple, right? Or SPY, or Microsoft, or NVIDIA a month ago, what are you saying? You with me? If we look at, let's say Microsoft, if you look at the last month, which would be, let's say roughly, in this area, we've hit a low in Microsoft of, we're down to 300 level, 310, and the high is 340. So if you liked it at 340, it's nice at 307. Let's take one for those who say, it's tough picking stocks. SPY, right? So you look at SPY's at 420, but if you look even the last month, again, and I'll give you a quick strategy that I'm looking at in SPY. You look at the last month, which is, basically this area, right? So in the last month, we've kind of been up to around the 450 and 450. And right now we're at 421. So you say, you know what, Dan, for the long portfolio, retirement, covered right, all that type of stuff, I'm a little scared. I know it's tough to pick the bottom. What would you recommend for the long portfolio? If you like, you think SPY will be higher in 3-4 months, here's a conservative way, I think, to do a covered right now. And because of the high volatility, you can get a lot more room on the downside. And because we're not using stocks, you can get good yields. So here's an example of one. I'm just going to give you an example of one and let you go and stew on this. We'll look at a diagonal. And let's just say there's many ways to do this. Let's just say I sell a November 3. That's 3 days out. And what I'm going to do is sell because we really haven't found a bottom here yet. You say, Dan, I'm concerned with the downside. Let's just look, for example, I'm going to sell a 65 delta call to give us maximum protection on the downside, but still allowing us to profit on the upside. Most covered rights don't have much downside protection. So I'm going to sell the 414 calls. And again, when you're doing kind of covered right type strategies with just options, I might go buy an in the money option. If this is November, let's just say I go out to February. I mean, I could go further. I could go March. I could go leaps, but this will be cheaper. And let's just say I'm going to go at maybe a 75 or 80 delta option. Let's say 80 delta would be the 380s. So I'm buying kind of a stock surrogate that will move like stock, but it'll be much cheaper. And it's going to look kind of like you would expect a covered right to look. If you look at this, let me set it up for you. We're currently at 421 in the SPY. I'm selling an in the money call, the 414, 30 days out. But I'm slightly, long deltas as compared with a, normal covered right. You buy 100 shares of stock, which is 100 delta, and you might sell an out of the money call with a 30 delta. If you did this in SPY as a covered right, you're going to be 70 deltas long, right? Here, if you look, our expiration break even, because we're getting so much for our in the money call, is 410. That's 11 points from here. In an SPX points, that's 110 points. So you got a lot of downside. And you look at this trade as a $3,000 trade, as opposed to if you did a covered right in SPY, it's going to be like, 42 grand, right? So this is a fraction of the cost, and the potential yields are going to be anywhere from, $200 to $300 could be, which would be closer to 8 to 10%, which is nowhere near potentially you'll ever get with a covered right. So this is a strategy that I'm looking at now, and in the money covered right, and especially when the volatilities are high. I like this strategy because you're getting more premium on those in the money calls. So something to look at is the stock SPX is still looking to kind of bottom here, but around these levels, there's a conservative way to have great position for the upside. You can see no problems, no risk on the upside, really, but you get plenty of room on the downside, which is not what you get with a conventional covered right. Something to think about. If you have any questions on this, give me an email, dan@sheridanmentoring.com, and you can check us out for some various classes and things at sheridanmentoring.com. Thanks so much. Have a nice day.